Market Day Report. Glad you're with us here on Tax Day. Okay, how are you starting your morning? Is it with maybe coffee? Is it with maybe orange juice? We're actually going to start there as we work our way through markets. Coffee market, what's happening? This has been up 3 consecutive days and continues to move higher. So just keep an eye on the coffee market. And while we're here, I'll go ahead and grab cocoa, which is selling off this morning. Orange juice market really hit hard over the past year, has been down well over 41%, but has been higher now 5 consecutive sessions. Talking about how it closes, May contract is moving higher. You know, since we're in the softs, let's just finish this before we jump into the row crops. Sugar moving in lower territory, and the lumber market is moving higher as well. Lumber has gained about 4% of its value this year. All right, now to the ones we normally talk about. Corn market, 2.5 higher, 464.5. Obviously, you could have corn for breakfast, right? And soybeans, I guess you could have soybeans for breakfast too. November at 1024.5, it's 4 cents lower. Down to the wheat market. It sounds like I'm describing Chex Mix, doesn't it? July down 4 3/4, 557. Hard red is trading 4.5 lower, 565 3/4. The spring wheat contract December now a tick lower, 646 3/4. And cotton 45 higher, 67.39. In studio with us, Chris Swift, Swift Trading. Chris, don't normally start with coffee and orange juice, but
okay.
Maybe you know where my mind is.
Well,
I need a little energy.
I've had a little coffee this morning. So interesting that you mentioned coffee. Of the 3 most inflated commodities, coffee right now, cocoa got booted out by coffee, gold still at that, and cattle. Those are the 3 markets that are the most inflated commodity markets. Go to the other end of the spectrum, energy markets set 4-year lows last week. So when we look at the difference between the two, it's a pretty interesting spread between those two.
I'm glad you brought up the energies. Let's jump over to West Texas Intermediate. And our trade on WTI right now at 61.70, now 61.61. It's up 8 cents. But we're trading above that $60 range. And now I read analysts saying, no, we're headed back down to 50, and others saying we could be going to 70, 75.
Well, we kind of look at it from last week, had an enormous amount of disruption in the markets. We had tremendous amount of information that was given, taken away, adjusted for. And if we look at where crude oil was trading prior to, we were in the mid-70s, 75, 76. A lot of commodity markets, the bond market was trading at the upper end of the level. They probably would not have been disrupted without last week's events. So what I feel is as last week's events begin to fade, they either become reality or they continue to be, brushed aside, then where do we go back? We go back to the levels of where we were before. So we've been very anxious to get some of our crude oil production, not crude oil production, but our energy production in what we need, the farm tanks and our tractors, get it booked, do something. We've got spring planting right here, and you have got 4-year lows of energy prices.
Wow. Okay. You mentioned cattle earlier, so how about we take a break? We'll come back in a moment, and we'll dig into the cattle.
Look forward to it.
Chris Swift's with us in studio. This is Market Day Report. Where will cash cattle go this week? In the South last week, light trading at 204, and then in the North it was 208, but I think packers need some more cattle this week, and will those with the cattle be able to hold out for higher prices? We'll have a standoff that's going on this week. We'll see what happens. All right, live cattle futures. We've been open 50 minutes or so here, 204.30 on that April contract. And again, as high as 204.72 on the session. We're 35 higher. The June contract popped above $200, but now back below that level with the deferreds. Feeders, what's happening on the feeder side of this equation? Well, when we look at feeders, we've been at 288.85 on that April contract, up 80, $1.47 higher on the May, 282.42. Then over to the hog trade, And hogs have really struggled this week and down 1.5% to 2% this month. And I'm talking about the previous 30 days, but still in positive territory this year. June contract up 70 at 95.82. Chris Swift is in the studio with us. Chris, you mentioned earlier the cattle market and in the inflated values there.
Sure.
What do you mean by that?
Well, we've seen a lot of inflation that is not commodity inflation. We were mentioned just a little bit. If you look at the relationship between gasoline prices, retail and wholesale, they're very, very wide. And historically, they've been 50, 60 cents apart, but we've either had an increase in taxes on that, or I think that we're just more inflated now. We're adding a premium, a retail premium, onto that gasoline for all of our gasoline stores and stuff. And then we look at another market, the cattle market, being extremely inflated right now. Beef prices are inflated, and again, every sector is having to do something about it, and the one seemingly like in the middle is the cattle feeder. He is the one that is not getting the excessively high fat cattle prices that would help to offset. We see that in the back, in the fall of the year, we had significantly higher feeder cattle prices going forward. So once you place that feeder cattle on feed, you got to consistently have a higher fat cattle price in order to overcome. So last week, we dropped approximately $42 a head from one week to the next because fat cattle prices didn't go up. They actually came down just a little bit. At that trajectory, in about 7 weeks, we would be back in the red again because every single week, the price of the feeder cattle has been higher all the way up until last week. So we're still right at the very tip top of that, making it very expensive for our consumers out there.
And if we had some stockers trying to hold on a little longer, put a little weight on them before they go into the feedlots?
That is the probably the agenda of everyone. I'm going to keep what I've got because there's so few more, and I'm having a more difficult time acquiring them. I'm just going to grow what I've got bigger, and that has been the agenda for the while. It will continue to be the agenda, and we've seen no aspects of any kind of expansion whatsoever. Last week was one of the highest heifer slaughter rates that we've had. So if you think back in the fall of the year, nobody held back the heifers in expectation for springtime breeding.
And I guess wrapping up here, we've got a standoff right now, buyers and sellers. You can only hold your cattle for so long, and you eventually have to get them out. You cannot just sit here on them for 2 more months.
Oh, absolutely. No, once they hit it, and now that they have grown them so big, it's even more dire to get them gone when they need to. We just hope that we don't have any kind of issues with packing, processing, where it really could back up, because it could be devastating now that we've got them where we don't have 2 more weeks of ability just to kind of hang on there or something. I don't think there's any ability at all. Once they reach a certain weight, they really need to go then.
Okay, great insight as always. Chris Swift is with Swift Trading, and that's how we start trading this morning.
All right, thank you for that update, guys.